This is a Momentum Media production.
The SMSF Advisor Show. Your expert insights into the biggest themes shaping the SMSF advice industry.
Hi everyone, and welcome to the SMSF Advisor Show. I'm Miranda Brownlee, and today in this special bonus episode, Shadow Financial Services Minister and former Assistant Treasurer Stuart Robert will be speaking with Editor of Mortgages Annie Kane about some of the recent developments in both the finance and advice industries. Stuart will be discussing his initial views on the proposals paper recently released as part of the Quality of Advice Review. He'll also discuss the rising compliance costs with providing advice and where he'd like to see the regulatory framework go around advice.
Thank you so much for taking the time to come and talk to us about all the things that happened during the Royal Commission. Obviously, you were there, the front lines when it was happening. When you cast your mind back over to that time, a pretty tumultuous few years, and it really hasn't stopped since then. Obviously, we've had a lot going on the last couple of years as well with COVID and natural disasters and a changing economic environment. Before we go into, I think, the ins and outs of what happened during the Royal Commission, can you just give me a little bit of an idea of what role you think financial services advisors, whether that's wealth, credit, super or accounting, has had on the financial well-being of individuals over this changing time?
Enormous amount. If you think about when we went into COVID, just as an example, there were about $50 billion on the personal balance sheets of Australians. Now it's something like $200 billion. It's a fourfold. It's an extraordinary amount of money. In many ways, because of the stimulus that was provided through, as immigration slowed down, we see full employment coming through, unemployment at 3.4%, which is full employment, youth employment at 7%. So Australians have had more wealth now. Don't believe the rhetoric. If you compare the census details on data from 2016 through to 2021, you'll see the average household wealth has substantially increased. So Australians are in a better place in terms of their lifestyles, in terms of their money, in terms of their individual balance sheets and accounts. And this is where the financial services industry is crucial in terms of providing advice that those Australians need to deal with the levels of, or the higher levels of income that they've got. But at the same time, we've seen some tumultuous periods, starting with Hayne Royal Commission, that have seen financial brokers, in terms of numbers, decline in the industry. Mortgage brokers have remained steady, which is pretty good. And insurance has been up and down as well. So there's been some big changes, but the industry has actually provided, I think, a very good service at a very difficult time.
Yeah, absolutely. And I think, you mentioned there about the stimulus. So much support put into the economy to try and keep it afloat. And what a time we had, what a time mortgage brokers had the last couple of years, an absolute boom in home property buying. They were really glorifying, I think, in the days. They were absolutely in demand. Actually was one of the people that bought a house over the last couple of years. Very exciting, obviously used a broker. But yeah, I think now, if you think about the amount of people that have gone into home ownership, it's incredible. And people who have obviously also built some wealth over that time too. Unfortunately, I'm probably not one of those people that bought right at the peak of market and now we're seeing those house prices cut back down again. So great, just got to stick it out until the next cycle comes around.
Well, that's true. CoreLogic this morning is recording, I think, house drops of 2.5%, give or take, in Sydney over the month, the fourth month decline, but it's still 15% above where it was, where it sort of stepped from at the early start of COVID. And whilst mortgage brokers are in making hay while the sun shines, if you like, I was there at the start of COVID as a cabinet minister, as the employment minister and skills, service delivery and in the expenditure review committee in the early parts of 2020 when it was dire and disaster. When we're speaking to mortgage brokers, the industry, speaking to developers, builders and banks, and they were predicting Armageddon. Treasury was talking about unemployment at 15%. I was looking at forward orders of some of our big builders, and they were falling off a cliff by July 2020. Hence, when we moved into the home builder schemes and providing incentives just to keep the industry moving through. And the results speak for themselves. I think Australia's come through better than any country on earth. The only country in the world, I think, there might be one or two others, that's got more of its citizens employed now than pre-COVID. Extraordinary result of what we were able to do together.
Yeah, absolutely. What a time as well. We had a little blip of a recession, but obviously, for the first 3 months of that year in 2020, who knew what was going to happen? Lots of things went on pause and then everything came back on again. And as you mentioned, there are a lot of support being rolled out from the coalition government as well. But we mentioned the role of mortgage brokers and how much they've been helping borrowers, not just now, but I think also previously. But there was a time when a lot of brokers feared for their careers. When the Banking Royal Commission was being undertaken, some of the recommendations that were put forward would have wholesale changed the way that broking worked, along with a lot of other industries. And we'll get into some of the specifics around the broking industry in a moment. But I just want to pick your brain, because obviously you were at the forefront of the government's response to the Banking Royal Commission at that time. You did a huge amount of engagement, I think, with the broking industry as well. When you cast your mind back to what happened, can you give me a little bit of an idea of what it was actually like to have been there? What was happening? What were your conversations being had during the actual Royal Commission before the report came out?
It was pretty nuts. The Royal Commission started, I think, at the end of 2017, December from memory. And I wasn't the assistant treasurer then. I came through halfway through. So I wasn't there at the start, but I was well and truly there at the end. Josh, of course, Frydenberg, a great friend, was the treasurer. I was the assistant treasurer. And of course, Scott Morrison was the Prime Minister. So the Royal Commission had commenced. When it started, there were many of us uncomfortable that mortgage broking had been included in it. Because if you're looking for problems in the financial services industry, and there were many, especially revolving around the banking area, mortgage broking was not considered one of them. As it was, mortgage broking was included within it. And then the Royal Commission moves through and some of the unconscionable conduct of banks and banking comes to the fore, and you saw the recommendations against many of the banks in the final report. But it was quite the roller coaster. I don't think people were as fully aware of the great challenges within our banking system at the time, just in terms of how customers were being treated. So that was eye-opening. But at the same time, we also needed to have an eye on the fact that there's only 8 or 9 AAA-rated banks in the world. We've got 4 of them. So we need a strong banking system. We don't want our banking system to be harmed. We want it to be improved, transparent, and accountable. So threading that line was really important, especially how the government responded. And of course, the report came down, given to us, I think on Friday, the 1st of February. But we, of course, were facing an election a few months later. So the worst time to have a Royal Commission into something that touches everyone's life is just before an election. So tumultuous, the interim reports, the commissions, the hearings coming out, the stories of Australians who'd been harmed were quite heartbreaking. But at the same time, we've got to keep an eye to a strong banking sector. We've got to keep an eye to, if you impose far too much regulation, the cost of capital and cost of borrowing goes up. All of that gets transferred to the mum and dad on the street because it all flows downhill. And an eye to an election. It was pretty busy.
Obviously now, Shadow Financial Services Minister, what's keeping you up at night now? What are you focused on? What are you worried about in the financial services space?
Not so much worried. It's about what is the next series of steps. So if I look at housing, the input costs into housing have gone up. Aluminium's gone up 45% in the last 2 years. It's not coming down. So all of the price increases into the stocks, so timber, aluminium, concrete, and the like that go into a house, glass, none of it's coming down. So that price of a new house is here to stay. So that's a concern. That's not going to help us. Number one. Number two, not that keeps me up, but how technology is going to shape what happens in financial services and broking. This is the next big step, the next big revolution of where we're heading. And we see that with MA buying Finsure. Obviously, John Calenda runs that, considered one of the good technologists up there with James Green, of course, built AMM that sold into Volt. Some extraordinary tech there that starts to revolutionize how you do loans. Tech now allows you to approve a loan in 10 minutes and to do a settlement completely electronically. That's where we're going to head. And the same thing in financial services. And in the future of financial services, what does advice look like? And how do we deal with technology-based advice, robo-advice, if you want to find a word for it? What is the future of algorithms and AI when it comes to advice? It's a hugely vexed question. We'll get there, not just yet, because advice needs to go 2 ways, like you and I are chatting, Annie. But until such time as you can question big tech, as an average person, it's going to be difficult to get that AI-driven advice. So if you look at big IBM's Watson, some of these really big machines, you can take 20, 30 petabytes worth of unstructured data, and you can ask a range of questions, and it can pull it all apart and give you an answer. Big data sets, crowdsourced data sets, will always give you a better answer than a professional. Always. And tech shows this time and time and time again. If I gave you 100 causal points of weather information based on what consumers are saying or doing across 1 billion emails for a particular region, and it's been proven this, in fact, Yahoo proved this, the result of what the weather's going to be tomorrow, using all of that crowd-linked causal data is more accurate than the 4 points of meteorological data from the Bureau. So how do you use that for financial services, but how do you question it? How do we get to a point where the average mum and dad can question the AI bot? Big N can do that now. Happens all the time. In fact, many of the hot tips from your stockbroker are probably coming from AI-driven machines, i.e. what is community doing and what are people talking about and what's going to drive sentiment. But it's not there yet for the mum and dad.
We're talking a lot about advice here and obviously a lot about mortgage broking, but advice isn't just mortgage broking. It also goes into financial advice, which has had a very different few years, I think, from mortgage brokers. Really, a lot of the wealth space looking at with quite envy, I think, at how the mortgage broking came together and unified and engaged with both policymakers and politicians around the issues that were facing them. The wealth industry was seeing a huge amount of change. FASEA, obviously, the education requirements, a massive drop in the number of advisors as well, the cost of compliance really going up and causing a lot of people to feel that they just aren't able to run their business anymore. At the moment, we've got the Quality of Advice Review going ahead, and Michelle Levy just released her first batch of recommendations proposals. Have you had a chance to look through them, and what do you think of them?
You're right. The advice industry is going through a massive revolution. I think the mortgage broking industry is in a great space, in a really good space. Super happy with where it is and where it's going, and everyone just needs to leave it alone, frankly, because it's doing a cracker of a job. When we come to financial services and that financial advice, you've seen banks exit wealth. You've seen a lot more regulation come on top. I think that's been, for the most part, unhelpful because it's put the cost of advice out of the hands of ordinary Australians. A lot of brokers have left and went, this is not where I want to be. Other advisors are saying, well, we're just going to go to the top end of town and move out of advice for everyday ordinary Australians. Now, the tech part will play a part there, but not yet. It's not there yet. So hence the Future Advice Review going, well, I think there's a problem here. Where do we go? Now, we recognised that the industry hadn't sorted its education out. And I've been doing this for 10, 12, 13 years with financial services, from even pre-Rudd and Gillard days on the Ripple review. I was a senior member of the coalition on that. So I've been doing this journey for a long time. And the industry, the advice industry, couldn't get itself together on education, couldn't agree, hence why FASEA was born now. FASEA is gone, thank goodness, because where it landed I thought was quite poor. I'd like to see industry own its own education requirements, come together like the broking industry did, where the players all got together and all agreed. I'd like to see that in financial services and in the advice industry as well. The Future of Advice Review, the coalition's still working through our formal response. It's a draft report, so we don't need to respond yet until the final one comes out. But some initial thoughts, if you like. Deregulating is a good move. We need to have only as much regulation as needed. So the Hayne Royal Commission, problem, regulation, response. The market's shown that it's not responding well and ordinary Australians are missing out. How do we lessen that regulatory burden, number one? Number two, opening the door for banks and super funds to get into advice, I think would be a retrograde step. Super funds are there to manage large pools of money with a long-term focus for a dignified retirement for everyday Australians. It's not there to give you annual advice on a range of investment structures you do outside of superannuation. Super should stick to super. It's not there to save the world. Super shouldn't be involved in everything to try and solve every problem. It's not a quasi-arm of government at all. They need to stop that and do what they do. And likewise, banking would poorly performed in wealth. They'll poorly perform again if it goes back to them. So I'm not convinced that allowing super funds and banking into advice is the right step, but I do want to see it deregulated. Do want to see it cheaper for ordinary Australians. We do want to ensure that transparency is strong, always got to be transparent in what advice is given and where it's going. And I do want to see a role for tech, but it needs to be defined. There needs to be a technical journey on what this looks like. And there are some really big questions to answer. So if something goes wrong, does AFCA take the builder of the algorithm to task? I mean, where do you go? So some questions there, but there's some initial thoughts on Miss Levy's draft report.
Yeah, if they are artificially intelligent, then whose intelligence is it, I suppose? There's also, I think, one of the advice review recommendations is around super funds being able to provide personal advice to their members, as you sort of touched on there, and the discretion to be able to charge members for that advice as well, which I know a lot of wealth and financial advisors aren't too happy with. What are your thoughts around actually having super charge their members for personal advice?
Since the election, super funds, notably industry super funds, have been thrust to the fore, initially, or in the words of the government, to try and solve all the problems of life. Well, it's not going to happen. They're not there to solve the problems of social housing, notwithstanding it's a state government responsibility anyway. They're not there to solve infrastructure problems. They're there to do investments long-term for the benefit of their members. They're there to be transparent. So moves by the government to remove transparency are completely and utterly outrageous at present. And they're there to ensure that Australians will have a dignified retirement. They're not there to provide personal advice to Australians. That's them becoming quasi-advisors or quasi-banks. Super should just stick to super. Banking, stick to banking. And then let's deal with the advice industry on how best to do that. Because otherwise you'll get back to the days where you had a large financial services industry providing product advice. And surprise, surprise, 76% of the product advice was into their own products. You just imagine a large super fund sitting there and going, we think you should invest in super. You should take advantage of the concessional and non-concessional contributions. Take advantage of the catch-up contributions for your spouse who hasn't been working because of children. You should, of course, they're going to say that. They'll say, look, here's what the super returns have been. They're really, really good. It's a large corpus of funds, and you shouldn't have that insurance over there because we've got group insurance over here. I can see it coming a mile away. We'll be back to the same conflicted area we were previously. So again, the coalition opposition has not formed a view. But my initial thoughts are, as the responsible shadow minister, this is not a positive step for superannuation to be involved in personal advice.
Well, it seems like there's always one review after another, so I'm sure we'll wait for the final recommendations, and hopefully that will be it for a little bit of time. Financial services can have a little bit of a break from all these reviews. But I mean, obviously, holding people to account is so important, and making sure that the financial services industry is working for the average Australian is so important, giving people access to advice, whether that's credit advice, financial advice, or accountancy help as well. A huge amount of work going on here to help people not only create wealth, but also rise from their current situation, aspirational, and maintain a healthy and safe level of financial comfort as well. Stuart Robert MP, thank you so much for your time today. Shadow Financial Services Minister, talking about a range of areas here, from mortgage broking to personal advice. If you could leave us with one thought to leave off with, things that maybe we should be thinking about in the financial services sector, or that you think people should be working towards, what would that be?
Couple of things. The industry just needs to continue to just do the right thing. We all know what the right thing is. We just need to focus on continuing to do the right things. One piece of advice when I was a very young military officer that General Storman Norman Schwarzkopf gave us after that historic win in the early 1990s in the Middle East. He made 2 points: winning command lead and do what's right. And those two remain prescient today. And I think the broking industry is doing that exceptionally well and serving customers well. And we've seen that in the last few years. And the financial services industry is moving that direction. The second thing I'd like to see is a whole lot more cooperation. Government shouldn't have to impose education requirements on the financial services industry on advisors. Why doesn't the AFA and the FPA and others all get together and agree on what the standard education should be and own that from a self-regulatory space? That would be superb if that advising space really stepped up. There's still a lot of divisions and a lot of different organisations there. That would be great. And the last thing is, for Australians, is personal responsibility remains key. So advisors who are doing the right thing, and the vast majority always have been, but you've still got to take personal responsibility for your life as an Australian. Take advice, yes, but you've got to make a decision. And if that decision is wrong because you've made a poor decision, well, own that. If the advice was poor and was shown to be poor, well, there are remediations available for you. But let's not move away from personal responsibility. The great thing about Australia is that you can do very, very well, or you can lose it all based on the individual decisions you make and the advice you choose. If advisors do the right thing, Australians also need to do the right thing, take personal responsibility. If we can do that, we'll have a vibrant industry that will serve us well.
Amazing. Thank you so much, Stuart Robert MP, Member for Fadden and Shadow Financial Services Minister, talking there to us here on Mortgage and Finance Leader about financial services space and the Royal Commission. We really appreciate your time.
Pleasure.
Interest rates are rising fast, and that means higher mortgage repayments. But some lenders have increased their rates more than others, so that could mean your clients are now paying too much for their loan. We can quickly compare your client's rate with hundreds of similar loans, so you are confident that you've got the best rate on the market, or we'll find you a better rate. Make sure your clients aren't paying the highest interest rates. Call Finny today. Visit finny.com.au and let us take the research and admin out of finding a new rate for your clients.